Thank you for tuning in to Faraday Copper's presentation today. My name is Graham Richardson and I'm the Chief Financial Officer. I'd like to start by thanking 121 Mining Investments for setting this up. Faraday is focused on the development of U.S. domestic sources of copper and trades on the TSX under the symbol FDY and on the OTCQX under the symbol CPPKF. I'd like to start by drawing your attention to the cautionary statements, as I will be making forward-looking statements during this presentation. And so at Faraday Copper, we're really focused on building a premier North American copper company and about bringing that senior company approach to the exploration and technical advancement of our assets. Our flagship asset, Copper Creek in Arizona, is a large undeveloped copper resource with a current mineral resource estimate of about 430 million tons and over 4.2 billion pounds of contained copper in the measured and indicated categories. And it's a combined open pit and underground resource. We believe that with the scarcity of development-ready copper assets, this provides an excellent opportunity for the advancement of Copper Creek. We recently delivered a base case preliminary economic assessment, or PEA, on the combined open pit and underground, with an NPV of over $700 million US and an IRR of 16%. The PEA is a foundation for us to build upon. It does not include any of our phase 2 drill results, and we'll touch on some of those shortly. And so our strategy moving forward is really to build upon the PEA through growing the mineral resource with definition of high-grade zones and step-out drilling, and also targeting new discoveries on the property. Copper Creek is known for the over 400 breccias that have been mapped at surface. 35 have had a drill hole or more put in them, and only 17 are in the current mineral resource estimate. So we see a lot of opportunity to make additional discoveries on the property. Breccias, they're high grade, they can be 1 to 3% copper mineralization. They're near surface and are what underpin the current mineral resource estimate for the open pit. We're well funded. We recently completed a Canadian $40 million financing in February. It was well supported by not only our strategic shareholders, the Lundin family, Murray Edwards and Pierre Lassonde, but also saw strong institutional demand. And so turning to our investment thesis, when we look at developer-owned copper assets in the Americas, particularly in the US, there's a scarcity of long-life, low initial capital projects, and that's where we see the potential for Copper Creek. Conversely, from an enterprise value relative to the measured and indicated resource, Faraday trades at a discount relative to the average of the group. And so that's where we see the opportunity for additional value creation as we continue to advance the project. Just quickly from a corporate overview, we're currently covered by Canaccord, PI Financial, and Hanneman Partners. Approximately 60% of our shares are held between our strategic shareholders, institutions, and insiders, who are really long-term shareholders and see the value in methodically advancing our project. So where are we? The property is about 65 square kilometers. It's located at the confluence of 2 main copper porphyry trends in southwestern Arizona. Arizona has a long history of copper mining, excellent access to talent in the area. Copper Creek itself is a historic mine with small-scale activities dating back to the late 1800s. It benefits from pre-existing roads that connect it with the regional infrastructure, including highways, rail, and power. Our land package is adjacent to the San Manuel Kalamazoo mine. It's owned by BHP. That was a mine that operated for almost 50 years and produced over 700 million tons of ore, largely from a sizable block cave. We see San Manuel as a good reference for the underground bulk potential of Copper Creek. Drilling down a bit more into our land package, it's a combination of private land, patented claims, unpatented claims, and state prospecting permits. The open pit is primarily situated on the patented claims, which are in the dark blue, while the underground is sort of between the 2 dark blue portions on the federal unpatented claims that are in the yellow color on your screen. In March, we acquired a large cattle ranch, which had approximately 6,000 acres of private land and was within a larger 32,000 acres of grazing leases that's shown in the green outline. The ranch provided us with optionality on infrastructure placement, as well as various other potential benefits, including potential for a solar plant. Now turning to the resource, which was updated as part of the PEA. Total, there's about 500 million tons containing 4.8 billion pounds of copper across the MI and I categories in the combined open pit and underground. The resource is well supported, is over 200,000 meters of drilling on the property, hence the high proportion in the M&I category. The open pit is underpinned by the high-grade breccias, while at depth, it's a sizable porphyry system that offers the bulk underground potential. The system remains open, and we have follow-up drilling planned as part of our phase 3 drill program. It's also worth noting the resource is fully geologically constrained, and the underground grade is fully diluted as we envision a bulk underground mining method in the PEA. And so here's a few visuals of the mineral resource estimate. The open pit across the top and the underground at the bottom. The pits are limited on drill data, and so a lot of that white space you see in between the mineralization is due to that limited drilling, which is an opportunity we see going forward to grow that pit resource with additional drilling. You can really see the high-grade cores of the breccias coming through the copper prints, and so we'd like to get a few holes in there to continue to extend that. In the underground, the keel is a higher grade area. It's been well drilled. With American Eagle having farther apart drill spacing. And so again, we see the opportunity to better define the high-grade cores within American Eagle through additional drilling. And we have follow-up testing planned as part of our phase 3 drill program, which will commence in October of 2023. So now turning to the PEA, or the preliminary economic assessment. So our base case looks at a 30,000 ton per day milling operation, generating over 50,000 tons of payable production per year. We see a rapid payback on initial capital of about 4 years, with the open pit then providing sufficient cash flow to fully fund the underground development. We have considered a stockpiling strategy to bring the high-grade breccia core forward, with some residual stockpile processing occurring in the last years of the mine life. The mineralization is primarily associated with sulfides, where we see recovery well and truly above that 94%. The study was really aimed at demonstrating the economic viability of the current resource within the context of the current inflationary environment, and ultimately forms a foundation on which value can be further created through the drill bit with additional exploration, as well as engineering studies and further optimization. And so the data cutoff for the PEA was October of 2022. And so just a quick look at some price and discount sensitivity. It's pretty straightforward. And so really here, I think it's worth highlighting that the PEA used a $13 per pound moly price. Every $10 increase contributes almost 130 million to the post-tax NPV. With where moly prices are today, we see that as obviously a value add to the project. And so in terms of my design, it was designed with the idea of optionality and scalability. It's software driven. This isn't a spreadsheet mine plan. The underground access was decoupled from the open pits, which means that you aren't waiting for a particular phase of the pit to get underground. You can sort of schedule the decline as needed. In addition, the project considers a conveyor materials handling system, which provides scalability as the resource grows. It's also worth highlighting the open pit grade distribution. You know, between the high grade and medium grade, you have almost 70 million tons at 0.6% copper equivalent, which is where that stockpiling strategy comes from and allows us to bring material forward in the mine life while stockpiling the lower grade material. The multiple concurrent mill feed sources provide that higher grade optionality and productivity. So here's a quick snapshot of the production schedule and timeline, where the open pits effectively feed the mill for the first 8 or 9 years of production, keel cave commencing in year 8, and by year 12, the underground is fully feeding the mill all the way through to year 29, when you're then just processing the lower grade residual stockpile. There's about 20 million tons of oxide material that'll be processed through a heap leach SXEW, and that's in addition to the 11 million tons per annum sort of base case mill feed. Turning to our site infrastructure, again, this was really configured for scalability as the resource grows. It also prioritized the use of private land for processing and tailings infrastructure. You also get a bit better overview here of the location of the pits and underground relative to the land position, with the purple being the private patented claims, showing the open pits, and then the underground projecting in between those patented claims. Turning to the environment and stakeholders, so at this stage, we're really focused on the data collection and engagement with our local communities and affected areas. We've installed flow meters in the drainages and piezometers in our drill holes. We've got a weather station to gather project-specific weather data. And all of this is really to start building that baseline environmental data that would support a permitting process to ultimately move the project into production. In addition, we've commenced updating historical flora and fauna studies, archaeological and cultural studies on the property. From a stakeholder engagement perspective, we've held local community town hall meetings with San Manuel, Mammoth, and Oracle. We sent letters, had meetings, and have recently had site visits with various of Arizona's Native American groups. We've also been proactive in our engagement with the regulators, including BLM, the Army Corps of Engineers, and Arizona Department of Environmental Quality. Got the BLM out to site a number of times as part of our phase 3 permitting. And so now turning to exploration, where really we see significant opportunities for growth. We're about 80–90% of the way through our phase 2 drill program, which we expect to conclude in early June. And we'll touch on some of the results that we've seen in those coming slides. And so on the property, there's sort of two key features here. The breccias are largely organized into a western trend and an eastern trend. So the eastern trend is, there's the Holy Joe Fault, which we believe is the conduit for mineralization within the resource area, and then the Western Fault, which seems to be the conduit for the porphyry and breccia mineralization to the west. Over 90% of the historical drilling has been conducted within the current resource area, and there has not been a drill hole put in anywhere along the Western breccia trend. And so we see a lot of opportunity for additional discoveries on the property, both to the north and south along that eastern trend, as well as testing some of the generative targets on the western breccia trend. We recently completed an airborne geophysical survey along with surface mapping, sampling, and some structural work. All of that, along with our results from our phase 2 drill program and the immense amount of historical data that we've got access to, we're going to use all that to sort of rate, rank, and prioritize our drill targets for our phase 3 program, which we expect to commence in October. We have the monsoon rains in Arizona in this part, and so essentially it's impractical for us to be drilling through the summer months. And so now turning to one of the highlights from our phase 2 program, which again, just as a reminder, this was not included in the PEA or our current mineral resource estimate. So this was one of the holes. We intersected massive sulfides, almost 11% copper over 15 meters, and elevated gold grades. This was entirely outside of the current open pit resource. And so our current resource does not include any gold credits or within the resource estimate, as gold assay coverage was not sufficient. So in addition to us assaying the current drilling we're doing for gold, we also saw the opportunity to assay some of the historical core and pulps that were previously not analyzed. We've shipped the first batch to the lab and sort of methodically working through increasing that coverage to hopefully support gold credits in the resource in the future. We don't see gold as being widely distributed or disseminated across the property, but certain domains, particularly from the breccia, seem to be favorable for hosting gold mineralization. And so we're working through that process now to ensure that we're targeting the highest likelihood and the best value. And here's another section. It's showing almost 100 meters at 0.7% copper, almost entirely outside the open pit shell. And so really both of these drill holes just speak to our thesis that the open pit has that growth potential, and with additional drilling and both step out, infill, and otherwise, that we'll be able to grow the size of the pit material and add to the mine life that way. And so in terms of opportunities and next steps, really it's about building on the foundation that the PEA provided. The PEA was really just a snapshot at a point in time. So we have those phase 2 drill results that will get incorporated into the estimates. We have the gold byproduct analysis that we're looking at both on current drilling and historical drilling. We also see the engineering opportunities to sort of the asset scalability through both higher production rates and some additional met work that's going to be targeting coarser grind size and tailing optimization. We have our phase 3 drill program that will kick off in October of 2023. It's a 20,000 meter program. We're going to be looking at testing new breccia and porphyry targets across the property. Also resource expansion through both step-out drilling at the current resource and better definition and expansion of those high-grade zones, particularly at depth. And then given the size of the property and number of targets we have, we're focused on building out those data layers to provide a pipeline of future targets on the property going forward. And so with that, at Faraday, we're focused on the development of a U.S. domestic source of copper. We believe that the scarcity of development-ready copper projects, the large undeveloped resource, and the exploration upside offers a compelling investment opportunity. So thank you for taking the time to learn about Faraday. For more information, please visit our website at faradaycopper.com or connect with us directly through info@faradaycopper.com. Thanks very much. Enjoy the rest of your day.